Hello everyone and welcome to this algorithmic trading walkthrough. In this video, I'll take you through a complete algorithmic trading system built in Python. We'll cover data collection and pre-processing, strategy implementation using a moving average crossover, backtesting with basic risk management, and finally perform evaluation and visualization. Let's get started. I begin by defining the key parameters. I chose Apple as the trading ticker, set the date range from January 1st, 2022 to December 31st, 2023, and initialized our portfolio with $100,000. Using Y Finance, I download the historical data from Apple. To ensure our data set is robust, I forward filled any missing values in the close column. Next, I compute the daily log returns, a common approach in finance that makes percentage changes easier to work with, and then remove any rows with missing data. This pre-processed data is the foundation for our strategy. The strategy used here is a classic moving average crossover. I calculate two moving averages, a short-term 20-day simple moving average and a long-term 50-day simple moving average, excuse me. The trading signal is generated by comparing these averages. When the 20-day SMA is above the 50-day SMA, the signal is set to 1, indicating a buy. When it's below, it's a -1, indicating to sell. To avoid look-ahead bias, I shift these signals by 1 day. This ensures that the decisions are made using only past data. In the backtesting phase, I simulate the strategy's performance. The strategy's daily return is simply the product of the signal and the daily return of the stock. I then calculate the equity curve by taking the cumulative product of these returns and scaling it by the initial capital. This gives us both the market, the buy and the hold, performance, and the strategy performance. For risk management, I implement a simple stop loss mechanism. I track the cumulative maximum of the strategy's equity curve and calculate the drawdown. If the drawdown exceeds 10%, the system triggers an exit signal by setting the signal to 0 for the next day. This adjusted signal is then used to recalculate the strategy's returns and the corresponding equity curve. Now I evaluate the performance of our system by calculating key metrics. These include total return, annualized return, volatility, and the Sharpe ratio for both the market and our strategy, with or without the stop loss adjustment. I use helper function to analyze returns and volatility assuming 252 trading days in a year, and then print out these metrics for a quick summary. All right. Finally, I visualize the results by plotting the equity curves of the market and pure strategy. Let me repeat that. I visualize the results by plotting the equity curves of the market, the pure strategy, and the adjusted strategy with stop loss protection. Additionally, I overlay the trade signals on the price chart and visually confirm our buy and sell decisions. So this is what we have here. We have our performance metrics. And then which, as of now, this is simple. This is a simple moving average crossover strategy. So our final strategy value was below the final market value, final strategy value. The final market value was above that. And then you can see the chart here, the equity curves per comparison, and then we have our trading signals on Apple price. In summary, the scripts demonstrate a complete algorithmic trading workflow, although simple, from data collection and strategy implementation to backtesting with risk management and performance evaluation. This end-to-end approach provides a clear framework for developing and testing trading strategies in Python. Thank you for watching, and I hope you found this walkthrough insightful.